You are listening to ChartingWealth.com for Tuesday, the 28th of June, 2016. We see a gigantic down candle, a very big one representing 2 days of strong down movement after a spinning top right before the Brexit vote. Of course, that came in after the markets closed on Thursday. The 2-day candle that we have ending on Monday, the 27th, going into Tuesday, the 28th, that is a huge down candle. We were already crossed over going down. The market was already in a down position on our 2-day chart. And we have seen the derivative oscillator accelerate. We've also seen the MACD and the signal line both diverge further, both in a downward direction. We have a very long down candle with a long wick at the bottom, which means, of course, the bears pulled the market even further down. The bulls were able to pull it back, officially down 2.01% for the day on IYY, which is an exchange-traded fund that tracks the entire market. If we look at what happened during the day on our intraday chart, we see, of course, two big down candles on the 4-hour chart. That is down movement in the morning followed by down movement in the afternoon. There was a crossover going down on the 24th of June, and we continued to see down movement on, that was Friday, and of course continued down movement on Monday. Now if we drop back to our 2-day chart and we look at what went on the S&P 500, it looks similar in the candle that we have. Again, that market had also crossed over going down back on the 15th. We'd seen a couple of up days around the 21st and the 23rd, but then rolled over hard for the candle ending on the 27th. That again is a 2-day candle representing Friday and Monday. Now again, the S&P 500 down 1.74% for the day. We have 4 down candles for the 4-hour charts representing, of course, those 2 days continued down movement. Although the market, we're going to just have to see. We could have hit a bottom somewhere around where those down wicks ended, somewhere around 198.82. Perhaps on the S&P 500, maybe not. Maybe it will continue to trudge down. We don't have a point to find an entry point at this point. So we are confirmed down moves. We want to see if indeed we have a pullback at some point and then can find the ability to jump into a down move. We don't have that yet. Remember, we're trend following. We don't make the trend. We follow the trend, and hopefully we'll have a point, a good point, to jump in, but we do not have it now. If you did not get in previously on a couple of the up moves, those of you who were trying to use the 4-hour chart to try to find pullbacks. So now, and we talked about that last week, but again, the danger when you have something like Brexit hanging out there is it could have gone either way. In fact, most people would have thought the Brits would not have voted for it and the market maybe would have soared. Instead, it did not. And again, that's betting, and that's not what you do with your money. You can go to Vegas to do that. The stock market is not for betting. Now, the Qs. What is the Qs? Well, of course, that is the NASDAQ 100, down 1.98% for the day. The 2-day chart down solid all the way below the Bollinger Band. The candle closed out again, crossed over going down around the 15th when the rest of the market did. We had those two 2-day candles on the 21st and the 23rd where it slid sideways, and then the big drop off. If we look on the 4-hour chart, what do we see? Well, we can see the crossover going down after the pullback that was underway, shot down hard over the last 2 days, Friday and Monday. So again, no pullback points, no ability to jump into this down move at this point. We'll just have to continue to wait and see what the market has in store for us. Again, we don't want to be stupid. We want to be smart and find appropriate moves. What did gold do? Gold was up 0.53%. We have a green up candle representing the last 2 days of movement on Friday and Monday. Gold up substantially above the Bollinger Band, the volatility bands. Again, an open green candle with a little bit of a wick on top, not too much. We've seen over the last two candles no huge change in the derivative oscillator, but the MACD and the signal line have diverged significantly away from each other. It was looking right before the Brexit move that gold was moving very much toward a crossover going down, but if you recall, we did not call it because it did not happen. What do we see going on the 4-hour chart? Well, we see that there was a pullback happening, crossed over on the 24th in the afternoon, and on the MACD and also the derivative oscillator the next day continued to move up, although gold is really holding somewhere around the top of the wick, somewhere around 126.80, something like that. We'll see if gold pushes above that. It may or may not. It may digest all of those gains, whereas the rest of the market may digest all of those losses. We shall just have to wait and see. We appreciate you joining us. We're here for you every day. It's exciting when you see things like the Brexit occur that affect the system across the board, and we'll just have to see how the market digests all of that and when we can get back into finding a pattern where we can get in. That's what it's all about. We're going to do over the next few days a couple of interesting trainings for you. Please be on the lookout for those. One is going to be on liquidity, and we're going to have another one on inverse funds, just so you can figure out how to do trades or investments in inverse funds when the market's going down, because you don't have to necessarily sit it out. We have all sorts of vehicles for doing other things. So please continue to tune in. If you haven't already signed up for our newsletter, which includes our podcast every day, you need to do that. You'll get a video podcast, the link to our podcast, and you'll receive that every day. Plus, you'll get the trainings that we put out. You'll get links to those, and we'll also share with you our layout that we use at freestockcharts.com. That is the Charting Wealth layout, in addition to how to read a stock chart, our video. Take you about 15 minutes to get a good idea of what we do at Charting Wealth. We always love to hear from you. Very much appreciate everybody who's gone and subscribed to our YouTube channel. We're getting closer every day to 1,000 subscriptions. We have thousands listen every week, but listening and subscribing are two different things. Once we hit 1,000, we can do proprietary broadcasts just for you at YouTube. So go there, subscribe. It will help us once we hit that 1,000 mark. And of course, thank you for making us. The last time we checked, we were 6 or 7 worldwide for stock market podcast at iTunes. Thank you so much. Please go there and subscribe to us on iTunes. And even more importantly, say something nice about us and get us a 5-star rating. It really helps us with the metrics. And when you subscribe there at iTunes, it helps us with our metrics too. We go higher and higher in the charts the more subscribers we have. So help us out and listen every day. The way you're going to get good at this is by practice. And we need you to practice every day. By practicing, you are going to get better. You're going to start figuring this out. Is it easy? No, if it were easy, everybody would do it. But how do you eat an elephant? One bite at a time. And the market is an elephant, and you need to start consuming it now. Thanks so much. We love to hear from you. Please go to Charting Wealth. Email us from there. Follow us Facebook, Twitter, Instagram, YouTube. You name it, we are there. We love to hear from you. We are here for you. All the best and God bless. Don't fear this market. Learn to read it. Remember, the market gives you signals. Being able to read a chart is the roadmap you need. All the best from chartingwealth.com.